Hello viewers and welcome to the channel. In this week's video I'll be discussing the Woodside and BHP oil and gas merger. Its title is "What does the merger between Woodside Petroleum and BHP Billiton's oil and gas assets mean for BHP shareholders?" So I'm going to address this question from the perspective of a BHP shareholder, and they are going to be quite stark different answers because while overall, in summary, I think this is a really good move for BHP. I would probably say for Woodside Petroleum, it's far more questionable, despite, obviously, strategic merits in joining the two. Anyway, just a little bit of a chart here since the beginning of January 2020, pre-COVID, the performance between the two. What's amazing about these two, of course, is that, BHP is back to new highs until the recent sell-off because of this, since its results and the merger of its oil and gas assets, but also the unification of its UK listing and Australian listing. It's been really strong. We've seen iron ore prices, copper prices, and of course even oil and gas prices recover to pre-pandemic high levels and even beyond. Woodside has really lagged that recovery in oil and gas prices for a few reasons I'm going to get into. I'll just quickly mention some of the details of the transaction. It's going to end up with BHP owning about 48%, which of the combined entity, which is a little bit lower than initial expectations. So maybe a little bit of a negative for BHP and a positive for Woodside. Over $40 billion market cap, which is great scale. Synergies of US $400 million, which is not insignificant. This is going to be there are a lot of common assets here, marketing synergies to be gained, head office synergies. You're going to see, I think, possibly that 400 million ultimately could be conservative, and this is the important factor, of course. Woodside shares are going to be issued to BHP shareholders. All right, a few things here to discuss. That are less important. And timeline, of course, we're looking at second quarter 2022. Just a few other things, again, about the potential benefits of the merger. So look, this is all spot on. There are clearly benefits for between putting these assets together. I understand why Woodside has wanted to do it. I certainly understand why BHP has wanted to do it. If you looked at BHP's updated, not only did we see it effectively dispose of its oil and gas assets, and I say that, but although you're not really getting rid of them, you are just going to be owning Woodside shares. But I think there's a strong likelihood that pure BHP investors are probably going to eventually look to sell those Woodside shareholders, and BHP is going to end up being this kind of pure play, forward-facing commodity business that not only is getting out of fossil fuel businesses, commodities like coal and oil and gas, but spending big on new emerging commodities like potash, which obviously accompanied its full-year result. So BHP, of course, I think is recognizing the change in the world. Woodside, its share price recovery, and that of Oil Search and Santos as well, have really underperformed those of the peers in Europe and North America. And I think the reason for that, of course, is they've been far slower to recognize the change that we're seeing on the ground, in that investors are now looking at ESG as one of the main criteria. By that I mean, environmental, social, and governance, main criteria when deciding whether to invest. And we're looking at the big majors abroad starting to plan for a future away from fossil fuels, and to lower carbon emitting technologies and commodities. And of course, in Australia, with Woodside Petroleum, Santos, and Oil Search, that has been a far slower evolution. And if anything, you'd say the fact that they are looking to, in Santos' case, merge with Oil Search, and now in Woodside's case, merge with BHP's assets, it looks like they're kind of committing even further to this fossil fuel future. And the BHP acquisition effectively will also come with it, some commitments in long-dated oil projects, which just seem in stark contrast to what they should be seeking to do. So as a Woodside investor, I'd be a little bit worried about the overhang, which is going to be there, because, as I said, a lot of those investors seeking good ESG role models in their investment portfolio are going to be steering well clear of Woodside Petroleum. So there's that overhang of sellers from the BHP shareholders, and obviously that commitment to long dated oil and gas projects would be infuriating for many Woodside Petroleum shareholders. And while the numbers that are on this screen clearly look good, and they're at many points this is going to look like a really cheap oil and gas play, and will spit out a lot of cash, and will sometimes be something you look at and say, well, God, it's cheap. Surely someone's going to come in and bid. There are reasons why it won't happen. They need to evolve. Oil and gas companies around the world are evolving, and I don't know why Woodside and Oil Search Santos have been slow to do so. And if I was a Woodside shareholder, I'd be frustrated. But look, BHP, the news is good. The share price hasn't responded well, but I don't think it has anything to do with the offloading of its oil and gas assets, and everything to do with its unification of its limited shares in Australia and its PLC shares in the UK. And over time, I think there's a benefit in that, and that will, the selling we've seen will unwind, and hopefully, at least from BHP's perspective, its new position as a positive ESG role model will start to attract investor interest from maybe a lot of investors out there who had previously deemed it uninvestable. Overall, I'd say really bright future for BHP, but Woodside Petroleum less so. Anyway, that's it for this week's video. If you like the video, please click like and subscribe. Thanks for tuning in. I'll be back next week with another video.